Welcome to this tutorial on VOOV versus VOOG Vanguard ETF comparison, where we will explore which ETF performs better. Both VOOV and VOOG are popular exchange-traded funds offered by Vanguard, a well-known investment management company. First, let's start with the basics. VOOV is the Vanguard S&P 500 Value ETF, which tracks the performance of the S&P 500 Value Index. On the other hand, VOOG is the Vanguard S&P 500 Growth ETF, which tracks the performance of the S&P 500 Growth Index. The key difference between the two ETFs lies in their investment approach. VOOV focuses on value stocks, which are stocks that are undervalued by the market and have the potential for long-term growth. VOOG, on the other hand, focuses on growth stocks, which are stocks that have shown high growth rates in the past and are expected to continue growing in the future. In terms of performance, both ETFs have their strengths and weaknesses. VOOV has historically performed well during periods of economic downturn, as value stocks tend to be less volatile and more stable. VOOG, on the other hand, has performed well during periods of economic growth, as growth stocks tend to benefit from increased consumer spending and investment. To determine which ETF performs better, let's look at some practical examples. Over the past 5 years, VOOG has outperformed VOOV, with an average annual return of 20% compared to VOOV's 14%. However, over the past 10 years, VOOV has outperformed VOOG, with an average annual return of 12% compared to VOOG's 10%. When it comes to best practices, it's essential to consider your investment goals and risk tolerance before choosing between VOOV and VOOG. If you're looking for long-term growth and are willing to take on more risk, VOOG may be the better choice. If you're looking for stability and income, VOOV may be the better choice. In conclusion, both VOOV and VOOG are excellent ETFs that offer investors a low-cost and diversified way to invest in the U.S. stock market. While VOOG has outperformed VOOV in recent years, VOOV has a longer-term track record of stability and income. Ultimately, the choice between VOOV and VOOG depends on your individual investment goals and risk tolerance. By understanding the key differences between these two ETFs and considering your investment objectives, you can make an informed decision and choose the ETF that best fits your needs.